Salam sejahtera. My name is Erickson Anabelan. Today I will be presenting a trend analysis of Nestle Malaysia financial performance from 2022 to 2024. This analysis will provide insight into the company key financial trend, performance indicator, and overall financial health over past 3 years. So I will start with the introduction. Nestle Malaysia Berhad, a subsidiary of Nestle, has been a prominent player in the Malaysia food and beverage industry since 1912. Recognized as a leading manufacturer, Nestle Malaysia operates in both domestic and international market, offering a diverse range of products, including well-known brands like Milo, Maggi, Nestum, and Cerelac. In this presentation, we will delve into the company financial performance from 2022 to 2024, analyzing key financial ratio to understand the trend and factor that have shaped Nestle Malaysia financial health. We will explore the mission to enhance the quality of life through nutritious product, their vision to nourish the nation, and their goal for sustainability and community support. Next is the trend analysis. Start with the liquidity ratio. So this is the liquidity ratio analysis of Nestle Malaysia from 2022 to 2024, as you can see in the slide. Liquidity ratio help us understand a company ability to meet its short-term obligation. There are three key ratios as shown in the slide, consists of the current ratio, quick ratio, and net working capital. For current ratio, it is calculated as current asset divided by current liability. So, as you can see, in 2022, the current ratio was 0.71 time. In 2023, it decreased to 0.61 time, and in 2024 it further declined to 0.55 time. This show a decreasing trend in Malaysia, in Nestle Malaysia ability to cover its short-term liability with the current asset over the 3 year. For a quick ratio, in 2022, the quick ratio was 0.20 time. In 2023, it's remained at 0.20 times, and in 2024, it slightly decreased to 0.18 time. The quick ratio indicates a stable but low ability to meet a short-term obligation with the most liquid asset. The slight decrease in 2024 suggests a minor weakening in immediate liquidity. For a net working capital, in 2022, the net working capital was negative 660 million. In 2023, it was negative 832 million. The negative net working capital indicate that Nestle Malaysia current liability exceed its current asset. This suggests potential challenges in meeting short-term obligation. In summary, the liquidity ratio of Nestle Malaysia show a concerning trend from 2022 to 2024. The decreasing current ratio and quick ratio combined with a negative net working capital suggests that the company may face increasing challenge in meeting its short-term ability. Next is the efficiency ratio analysis of Nestle Malaysia from 2022 to 2024. Efficiency ratio help us understand how well a company is using its asset to generate sales. Three key ratio: the average collection period, fixed asset turnover and inventory turnover. For an average collection period, this show that Nestle Malaysia efficiency in collecting receivable improved in 2023 but returned to 2022 level in 2024. A shorter collection period is generally better as it indicated a quicker conversion of receivable into cash. For a fixed asset turnover, in 2022, the fixed asset turnover was 1.6 at time. In 2023, it increased to 1.9 at time, and in 2024, it decreased to 1.71 time. The fixed asset turnover indicated how efficiently Nestle Malaysia is using its fixed asset to generate sale. The increase in 2023 suggests improved efficiency, while the decrease in 2024 indicates a decline in the utilization of fixed asset to generate revenue. The last part for the efficiency ratio is the inventory turnover. The inventory turnover show how quickly Nestle Malaysia is selling its inventory. The decreasing trend from 2022 to 2024 suggests that the company is taking longer to sell its inventory, which could indicate issue with demand, storage, or inventory management. In summary, the efficiency ratio of Nestle Malaysia present a mixed picture from 2022 to 2024. While the average collection period remained relatively stable, the fixed asset turnover and the inventory turnover ratio show notable fluctuation. The decreasing inventory turnover is a concern as it indicates a slower inventory movement. Another trend analysis is the leverage ratio. Leverage ratio help us understand the extent to which a company use debt to finance its asset and operation. For a debt ratio, in 2022, the debt ratio was 26%. In 2023, it remained 26%. In 2024, it increased to 0.36 or 36%. This show that the proportion of Nestle Malaysia asset financed by debt remains stable from 2022 to 2023, but increased in 2024. A higher ratio indicates greater financial risk as the company rely more on debt. Next is the debt to equity ratio. The debt to equity ratio indicates the proportion of debt and equity Nestle Malaysia uses to finance its asset. The increase in 2024 suggests that the company is using more debt relative to equity, which could increase financial risk. For the time interest earned, the time interest earned ratio measure Nestle Malaysia ability to cover its interest expenses with its earning. The negative value indicate that the company did not generate enough earning to cover its interest expenses in this year, which is a significant problem. In summary, the leverage ratio of Nestle Malaysia indicate a concerning trend from 2022 to 2024. The increasing debt ratio and debt to equity ratio combined with negative time interest earned ratio suggests that the company financial risk has increased. Last part for a trend analysis is the profitability ratio. Profitability ratio help us understand how well a company generate profit from its revenue and asset. There are three key ratios: the net profit margin, return on asset ROA, and return of equity ROE. In 2022, the net profit margin was 9.31%. In 2023, it slightly increased to 9.36%, and in 2024, it decreased to 6.68%. This shows that the percentage of revenue that translated into profit for Nestle Malaysia remained relatively stable from 2022 to 2023, but decreased in 2024. A higher margin indicates better profitability. For the return on asset, the return on asset indicate how efficiently Nestle Malaysia is using its asset to generate profit. The increase in 2023 suggests improved asset utilization, while the decrease in 2024 indicate a decline in the efficiency of asset utilization to generate profit. For the return of equity, in 2022, the ROE was 99.04%. In 2023, it decreased to 97.77%, and in 2024, it further decreased to 75.91%. The return of equity measure how efficiently Nestle Malaysia is using shareholder investment to generate profit. The decreasing trend from 2022 to 2024 suggests that the company is generating less profit from shareholder equity, which should be concern for investor. In summary, the profitability ratio of Nestle Malaysia show a mixed trend from 2022 to 2024, while the net profit margin remained relatively stable initially. It decreased in 2024. The return on asset and return on equity also show a decreasing trend, indicating a decline in the efficiency of asset and equity utilization to generate profit. In conclusion, this trend of Nestle Malaysia from 2022 to 2024 provide valuable insight into the company financial performance. While some areas show positive trend, others indicate potential challenges that warrant further attention. Overall, understanding this trend is crucial for assessing Nestle Malaysia financial health and prospect. That's all my presentation. Thank you.